Firstly, while I was at the table, I was told that there was some degree of difference this morning as to whether Basel III will have a negative impact on the continent or not. I think firstly, Basel III is going to happen. It's not a question of whether it's good or it's bad. It's a question that it will happen, and we need to see how we as different countries in our own countries work together as the banking system, other sectors of business, and regulators to actually mitigate whatever impact there might be, negative impact, but also to look at how we do this at a regional and continental level. I think it also presents some opportunities, I think, at a regional level that I'll touch on. Let me start with South Africa and then just talk a little bit about the continent. We are not too concerned in South Africa about the capital issues. Banks in South Africa are pretty well capitalized, and essentially what the capital requirements would do is reduce the bank's capital adequacies from an average of about 13.5% to 12.5%. So we're not too concerned about the capital requirements. We'll manage those pretty well. We are, however, concerned about the liquidity requirements. And work we're doing with the Reserve Bank, there's a committee that's been put together under the Ministry of Finance, bringing together the industry as well as some of the regulators, as well as the key regulator, which is the Bank Supervision Department in the Reserve Bank. And we're estimating that we need to increase capital, liquidity by approximately 170 odd billion rand if we are to meet this. So it will have an impact. That doesn't mean we would not be able to manage the impact and mitigate this. And there is a transition period. There's an 8-year transition period for the application of this. And we will work together with the authorities to see how we mitigate this. We're looking at whether we need to actually look at the structure of the financial sector itself in our country, and whether re-looking at the structure of the financial sector itself would be one way to actually mitigate the negative impact, and there could be other ways. So there will be an impact. Our regulators are absolutely clear, like we did with Basel II. In January 2008, we implemented essentially the Rolls-Royce of Basel II, managed it quite well, and our regulators are quite clear that we will implement this. We're very proud of the fact that our banking sector is number 6 on the World Competitive Report as far as its stability and its efficacy goes, and we obviously want to protect that. Looking at other parts of Africa, I think the one thing that needs to be noted is that many parts of Africa haven't even started coping with Basel II yet. And so the impact of Basel III is debatable, and the ability to even implement some aspects of Basel III is debatable. But having said that, I think if one looks at just some of the stats coming out of Africa, we've got some very positive statistics coming out. But as far as financial markets go and banking assets go, Africa is still very small compared globally. So the African banking assets are about just under 0.1% actually, 0.87% of global banking assets. Bulk of that South Africa. Stock market, the African stock markets, 2.09% of global stock market capitalization. Again, very small capital markets, very shallow capital markets. And the fact that it has very small and very shallow capital markets, which even today makes it very difficult to actually raise long-term capital from domestic long-term capital in many of the African countries, means that stricter liquidity requirements is going to exacerbate that situation. Impact on mortgage finance, we believe that there will be an impact. South African banks are developing quite a footprint on the continent. One of the things we want to do is leverage off the mortgage finance experience in South Africa and see if we can develop mortgage finance markets in other parts of Africa. We believe it will have an impact because long-term capital will be even more constrained. cost of credit would probably go up, and riskier projects could find it very difficult to actually raise money. So I think that it would tighten up the sector, if you like, and tighten up the sector's interaction with the real economy. That doesn't mean we can't manage it. That doesn't mean that it's going to have the sort of impact that's going to kill investment on the continent, but it does mean that it's something we need to factor in actually planning and strategizing for future investment. I also believe that there are some opportunities that the situation presents. I think that we should, on the back of this, begin to be more robust about regional cooperation in how we manage and prevent crises, not just in the financial sector, but in the broader economy, because the financial sector crisis had a knock-on impact on the economy, as we all know. And that I think that there's an opportunity for critical private sector players as well as the authorities to actually get together and say, how do we now work together across borders, particularly in regional structures, to actually mitigate these sorts of things coming in future, if they do come. And we should also be able to cooperate to develop regional and domestic bond markets, something that certainly from the Banking Association through a structure called the SADC Banking Association, we're working quite hard with the regulators to actually look at in the SADC region. And I think that the crisis and the regulatory impact of the crisis is simply pointing even more robustly to us having to do this. I think that just on this part of my input, just to also say that the Institute of International Affairs, for instance, estimates that Basel III could cut the American economic growth by about 3%. So it's going to have a significant impact, not just in Africa, in other parts of the world. But as I said, it's going to happen. It certainly has to happen in many ways, and we need to manage that. Let me just say a few words about financing and about a case study, successful case study. One, financing of infrastructure in particular and various other types of businesses is happening and has happened in various ways and through various agencies. There's obviously private sector investment, but there are also a number of development and quasi-development institutions very active, people like Proparco, people like the Infrastructure Consortium for Africa, and so on. Private sector investment has also taken different forms. There's been management and lease contracts, there's been concessions, particularly in the transport industry, there's been greenfield projects in energy, and so there is quite a lot of activity. However, there's no doubt there's a lot to do. If one looks at private sector investment, particularly in sub-Saharan Africa, it actually went up from about $11.8 billion between 1999 and 2000 to about $37.25 billion between 2001 and 2006. But only 1.3% of that investment was cross-border investment. So I think in regional and cross-border investment areas, there's still quite a lot to do. Let me just finish with a success story. And in looking at this, I wanted to look at a story that actually demonstrated public-private partnerships. And the one I found interesting was a few years ago, people like IFC, MIGA, IBRD, and CESOL from South Africa combined to develop the Southern African Regional Gas Project, which was an 865-kilometer, 26-inch diameter pipeline between South Africa and Mozambique. It's a pipeline between gas fields in Mozambique and Sasol's plant in Secunda. It developed gas fields in Mozambique. Standard Corporate Merchant Bank was the lead arranger, and a project of just about $1 billion. And there are quite a few like those around. So let me stop there.
Doing business in Africa. You can't afford to be without Africa Investor.